At first, it looked like a localized issue. A few weak pockets in Southwest Florida, some price cuts, some rising inventory. Nothing unusual. However, that assumption would not last. What began in the region as a slowdown has spread across the state. In the first quarter of this cycle, all major Florida housing markets are showing signs of decline. The tide has turned. Jacksonville to Miami, Orlando to Tampa. Prices are no longer rising, they are falling, and not in secluded spots, but throughout the board. Annualized losses range between 4 and 13%, depending on the region. Even those markets that previously seemed to be stable are starting to melt. But the numbers in the headlines don't tell the whole story. The fact that it was not only the decline, it's the conditions behind it. And those circumstances have dissolved. The most significant change is the one in inventory. Inventory. The housing market is based on inventory. Low supply and high demand drive prices higher. But when the supply is a little bit more, when demand is very weak, things change in no time. It is now quite evident in Florida. By the early year 2026, there will be approximately 158,000 active listings in the state. That is the greatest stock turnover in the current decade. Meanwhile, the demand has not come back. The number of home sales in January is at its lowest level in over 12 years. Consider that combination momentarily. The supply was the greatest in 10 years and the weakest demand since it was a decade ago. That is not a stable market. That is a market pressurized. This is pressure you may read in actual business. Homeowners who purchased towards the highs in 2022 and are selling at massive losses are also present. In certain cases, homes are selling 30 to 40% below what they were bought for. A house bought for $425,000 a few years back is now being resold for almost $297,000. That is a loss of over $130,000. And these are not pathetic, uninhabitable houses. Many are move-in ready. These are actual results in the prevailing market. This is no longer a forecast. It is already happening. Meanwhile, the demand side of the equation is becoming weak. Movement into the state of Florida, which was among the largest forces for the housing boom, has slowed significantly. The number of people entering the state is lower than it was during the peak pandemic, and that matters. Due to the fact that the earlier price boom relied so much on the influx of new customers into the market. In the absence thereof, the demand automatically tends to soften. Costs are also rising. Property levies have gone up. Premiums have been on the rise. HOA fees have climbed. The price of ownership is very high among many homeowners, much higher than anticipated. That creates pressure, and in other cases, it causes forced selling. The foreclosure activity is starting to increase, and Florida is now one of the most foreclosure-active states. This puts an extra supply to an already saturated market. In markets that seem healthy on the surface, the data tell a different story. Take Miami as an example. We have the headlines of rich people moving and businesses growing. However, in the housing market, demand is not rising. Home sales are at a level never seen before in more than a decade. Inventory continues to rise, and prices, they start to fall. This brings out something significant. Stories do not make housing markets. Supply and demand do. The trend is the same all through the state. Tampa is down, Orlando is down, Sarasota is down, Cape Coral is down. There are already regions that are registering double-digit declines. And still, despite those declines, the prices remain higher than during pre-pandemic times, which is, affordability is not good. That leads us to the most important question. In case the prices are decreasing, and yet demand is not coming back, the answer is simple: affordability. Mortgage rates have been high. Monthly payments remain high relative to income, and many buyers are waiting for better prices, waiting for lower rates, waiting for certainty. Such indecision makes the market even slower. To see whether this will lead, we must consider the actual adjustment in the housing markets. They do not fall immediately, they move in stages. First, inventory rises, then prices flatten, then demand weakens, and lastly, the overall prices start to fall. Florida is passing through that progress. The other significant indicator is days on market. This is the time it takes a home to sell, and in Florida, the number is growing. Homes are sitting longer, buyers are more selective, and sellers are made to adapt. This is how pressure builds, not through sudden crashes, but through slower movement. Behavior change is also taking place. A big number of sellers remain pegged to the highest price levels in 2022. They list high, they wait, and if the house doesn't sell, they take it off the market, and then they relist later. Recent statistics indicate an increase in relistings. Thousands of sellers who stepped aside are returning. This forms an obscure layer of inventory, and it contributes to the general supply pressure. Simultaneously, builders are responding more quickly than single sellers. Builders are offering incentives in many markets, lower interest rates, closing cost assistance, price adjustments. These benefits decrease the real cost of purchase, and they directly compete with resale homes. If the new house is cheaper per month than a resale, buyers turn to the former. That forces resale sellers to adapt. This is a critical dynamic, since those who make buildings are not emotional, they are financial. They adjust quickly, and as they adjust, they change the whole market. There is also a change in investor behavior. Some investors ventured into the market during the boom, but returns decrease when prices stop growing and expenses keep rising. And as returns slow, there is an exit by some investors. That adds more supply. All of these forces form a feedback loop. Increased inventory means slower sales. Slower sales result in price cuts. Price cuts weaken confidence. Lack of confidence decreases demand, and a sluggish demand contributes to extra inventory. This is how markets shift, gradually at first, then more visibly. It is important to remain down to earth. Not all markets will fall, not all homeowners will suffer losses, nor will all regions be alike. But the broader tendency is becoming plain. The state of Florida is not in an expansion mode, it is in a correction mode. The most important variables to pay attention to are easy to spot: inventory, sales, and time on market. If the inventory keeps growing and demand is low, prices will be under pressure. When demand is stable, the market could stabilize, but at this moment, there is no apparent portent of a solid recovery. This is not predicting that tomorrow will crash. It is concerning the acknowledgement of a change which is already taking place. The circumstances under which the boom was fueled have shifted, and the market is adjusting. To the buyers, this is an opportunity. More choices, less competition, better negotiating power. On the seller's part, it requires adaptation, realistic pricing, patience, and self-awareness of altered circumstances. In the pandemic, Florida was among the fastest accelerating housing markets. Now it is even becoming too normal. And that transition, it makes it all the more important. Due to the fact that what happens here is seldom kept in secrecy, it often spreads, making what happens in Florida today a signal for markets elsewhere tomorrow. Watching Florida means understanding what could come next.